So if we step back and look at our technical landscape upon adoption of Nakisa, we chose a on-prem portfolio or on-prem solution whereby we had integration with respect to fixed assets, general ledger, and accounts payable. We then had data sync between SAP and Nakisa from an asset class perspective, as well as our foreign exchange rates. We also have the ability to maintain 8 different exchange rates by company codes inside of Nakisa. We took a decentralized or disconnected approach with respect to cost objects and vendors. And really the reason for that is that our vendor master and our cost center master is enormous given the number of company codes that we have. And really from a leasing perspective, you're only touching a subset of cost centers and a subset of vendors. So it was much easier for us just to keep those disconnected and develop a process for adding new cost centers as we needed and adding new vendors as we had new leasing partners engaged. From the interaction with respect to Nakisa and SAP, we had to ensure that we had dual postings for both US GAAP and IFRS. We are on SAP ECC 6, which is the classic general ledger. Because we were on the classic GL, we took an approach with respect to what is called an account approach in order to maintain a reporting structure that supports both IFRS and US GAAP so that we could get a full balance sheet and P&L under each reporting standard. We also have integration from Nakisa into SAP from an accounts payable perspective. You really have 2 different options here. You can either post your AP transactions through a clearing account, or you can post your AP transactions directly to the vendor account. We actually have both scenarios depending on the company code. There are some companies that want to manage their payments against purchase orders, so we use the clearing account. And we have other companies that just want to remit the payment directly to the leasing agent, whereby we just post directly to accounts payable, the vendors. From a journal entry perspective, we also wanted to ensure that journal entries were interfaced directly with SAP GL, that the journal entries were easy to follow and easy to help support the transactions that were now going to be supported by the 6 journal entries instead of the 2 journal entries. And then the last piece is that we were also integrated with respect to fixed assets. So when you're integrated with respect to fixed assets, there's actually 2 different approaches that SAP takes with respect to operating leases and finance leases. So from an operating lease perspective, Nakisa controls the depreciation postings. From a finance lease perspective, SAP controls the depreciation entries. So on one hand, we had interaction between the 2 systems, but it wasn't consistent interaction, or it wasn't, you couldn't look to see what your future operating lease depreciation would be from an SAP perspective. You could only look at it from Nakisa. Whereas on the finance lease side, you could look at it from both systems at the same time.